All right, if you are new here, let me know in the chat, either in the YouTube chat or in the Zoom chat, whichever chat you can see. Let me know in the chat you're new. I'd love to welcome new people. If everybody's just fine and dandy, been here before, we'll get started. And so welcome, everybody. We're going to talk about 3 things today. The crazy options anomaly that had me cancel my Saturday thing. If you got invited, sorry, we had to cancel it. If you didn't get invited, well, you're going to get you up to speed here. And then preparing for the Fed FOMC meeting going on right now at 2 p.m. tomorrow. The rate change announcement comes out. We'll talk about the pros, the cons, what's up with that. And then, as always, number 3, I'm going to check out your stocks, your requests. So we have Louis is brand new. Glad to have you, Louis. And if you don't know me, you've never been around me. I've been doing this most of my life. I started paper trading in elementary school, playing the stock market game. That was some nearly getting closer to 40 years ago. And as soon as I graduated, turned 18, I opened a real money account. That was right in the middle of the dot-com bust, and kind of survived the dot-com bust, survived the housing bust, survived the freak out that was in late 2018 and 2019 into 2019, and then made a bundle, 7-figure takeaway, I guess you'd say, off of the March 2020 freak out in the markets. And then in 2021, I got asked to come share what I do with the masses, and that just kind of got me to where we are today. Been getting better and better. Never been, was not a guru, was not a share type person before that, and practice every week and try to get better. And if you haven't checked it out, you got to check out my YouTube content. I've been working on a class, learning how to make better content, trying to put it out there. So if you want to support me, go check it out, like and subscribe it. I put out new stuff all the time. And of course, this live stream right here is on YouTube live right now. And if you want to go watch it, you need to rewind after we're done. Go check it out. So thanks for coming, everybody. All right. Now, let's jump into it, shall we? So this is the big thing right here, the options anomaly. Now, I know it's a little bit blurry. I boosted it up to make it the big screen here. So institutions bought a record amount of hedges here in the last 2 weeks. This right here was 3 times more hedges than they had at the peak of the 2008 freak out. All right. So that represents about an $8 billion, billion with a B, $8 billion put buy, which was matched with about a $1 billion call buy. That's why it comes down here to about minus 0.7. That means it's 7 times more puts were being bought than calls. So in my books, that kind of thing happened in the market is where extremes happen. Now we had an extreme up here, and now we've got this, coming into 2022, and that was kind of the top. And now we've got this extreme down here. This could be at least a temporary bottom. Now, I'm not saying it is the bottom for sure. We've got some other headwinds out there. I'm going to jump into that here in just a second. And let's keep talking about it here. So this is the options that are on the S&P 500, SPX. This is the index itself. You can trade options on the index. If you didn't know that, you can't buy the index directly, but you can trade options on it. Now, sitting out here at 4,005 is a large chunk of calls and a large chunk of puts. But you can see these puts go all the way down through here. Now, this is just for the next few expirations. This is not all of them out there. And that $8 billion put buy was not all in one expiration either. It was spread out across many expirations out into the future, but it's out there in the market. Now, what does the market like to do when a whole bunch of people go into one trade? It likes to rip that trade. So that for that very reason, I have a feeling that we may see an irrational rip in the market And the catalyst can be coming up tomorrow when Jerome Powell announces the rate change announcement. Now, the possibilities we got going right now, if Jerome Powell sticks to his guns, sticks to what he's told us, 3/4 point raise, 0.75% raise. Now, the rumblings out there have been a 1 point raise, and maybe the market doesn't have a 1 point raise priced in right now. So that could be the freak out, some more downside potential right there. What might also happen is a 0.5 point raise, which could lead to an amazing rally in the markets, potentially. Or we could get a rally regardless just because of the options that are hanging out there. So I want you to have that in mind, that 4,000, we could rally right back up to 4,000 very, very easily to rip these puts that are out there. And then we could also break on out. Now, last Thursday, I put in Discord. If you're not in Discord, come join us. For all my members, anybody that's bought anything, you get to get in Discord. I put out this support level right here and this resistance level up here. And this was on Thursday. We were trading about in this area right here. The very next day on Friday, we popped right down in there. We've been hanging out there Friday, Monday, Tuesday, just kind of hanging out right here. We tried to break out, little push higher, and then right back down in there. So consolidation right in this oval. Now a breakout. Well, that puts us back into this question mark zone right in the middle there. And a break up here above 40.50 can take us out potentially all-time new highs. 4,500 is probably the next stop before we get another pullback in the markets. Now, if we break down below here, well, I just put out a YouTube video yesterday about what happens if we break down below here. So you can go check that out and let me know what you think. Apple, though, everybody loves to, we usually review Apple every week. Now, this is kind of interesting right here. This is a 3-day chart, Apple 3-day, right up here in the upper left. We rallied up and we had broke through this downtrend of highs right back here. And I said that was the initial indication of a bullishness. Now, this dashed line coming through right in the middle there, that is essentially the same as the orange roadmap line that you see me have on the chart all the time, the 144 EMA. Now, we have pulled right back down and touched it on the last 3-day candle. And today, rallying up strong. It was pretty much the one thing holding up most of the market today. Apple. Now, when Apple has irrational exuberance in buying and it doesn't make any sense, usually that's big money tipping their hand a little bit, tipping their hat, that they're planning on a market rally. The same very thing happened right back here. We got 2 big buying days, and then it kicked off this bigger rally. So this right here, big buying day. I'm not saying for sure it's going to kick off. I mean, these are 3-day candles. We had 2 big 3-day buying candles right there, and it kicked off a rally. So this big buying candle right here with high volume today could be the start of something. Just got to stay tuned, keep watching. But that was a perfect classic market roadmap bounce right there, right down to the market roadmap line, bounce. We can see the next extension. The market likes to echo, and this thing can do this whole run one more time that'll take Apple to all-time highs right there. So that's out there. Now, other stuff in the market, like I said, I put out a video on S&P 500 breaking below this zone. 3,500 can be a very real possibility. 3,400, even all the way down to this 3,200 zone that I've been talking about. So we could be on this path that takes us right on down to there into the new year. Just be aware, be cautious, be ready. Now, Nasdaq also has the same sort of situation. It's probably going to extend back down to the low 10,000 or even down in the 9,000s. Russell right there holding. This is the bright spot in the market. Russell's kind of been leading quite a bit this year. Russell's been holding the 618 bounce. That is my measured bounce setup potentially. This thing can, just rip on up out of here. So This one has a very nice setup for a bullish move, but if it breaks down, we could see down to the 1500, on IWM, which is the Russell ETF, like SPY is for S&P 500, QQQs is for Nasdaq, IWM is for the Russell. We could see 150 area on Russell if this thing breaks on down. Oil has pushed into the target zone, as we talked about, but it hasn't managed to get out of here yet. The reversal has not been confirmed. We could see it push lower on down into this 79, even as low as 75 was my target area. And if it really just, the bottom drops out of it, we could see a push all the way down into the 70 zone. That's on oil futures. To hear about the barrel, how much a barrel of oil is on the news all the time. If you want to pull it up on TradingView, CL1 exclamation point right there. Gasoline prices still looking like they've got lower to go. Thank goodness, right? Thank goodness. Looks like gasoline is going to pull all the way back down into this $2 area before it finds support. Gold getting right close to the target. This 1620 area I've been talking about for a long time. Looks like we're almost about to hit it. So look for gold to find some support in the coming days, maybe the coming weeks. And that zone where I've been talking about for, almost at least a year now, right? We're about to finally hit it. Crypto did not go horrible on the merge, the Ethereum merge. If you aren't up on Ethereum merge, go Google it, find out after we're done here. But it was a technical change where traditional crypto mining with computers went away for Ethereum, and they transitioned to proof of stake. Already, some people suspect there's a 51% attack in the works on Ethereum. So we'll see if this holds up, if it was a smart thing to do. So what does that mean for the rest of crypto? Well, we are waiting for Bitcoin to bottom out and start its halving run. Now we're getting right into the 18 months ahead of the halving. And what is halving? That's where the payout rate for mining a block of Bitcoin, and Bitcoin is still, on traditional computers, mine it with hard computational problems. The payout rate for that halves in March of 2024, roughly. It's not a fixed thing. It's based on the blocks that get mined. And we are right at 18 months out from that March 2024. So this can, this was the Ethereum merge. We could bottom somewhere in here and kick off the halving run. The halving run typically starts 12 to 18 months ahead of the next Bitcoin halving. That's been, in the historical charts. If we pop back up to the monthly here, we have had halving runs over and over and over. Every time it halves, which is typically, been about every 4 years-ish. Not exactly, but, roughly 4 years. And we kick off this big run. So that is potentially coming up in Bitcoin. It will last through 2024. The halving run typically peters out the year after the halving. The last halving happened in 2020. And we rallied right up into late 2021. So that's on the horizon for Bitcoin. And the next big thing in crypto, really. Now, the Ethereum merge was not the end. There's like 5 more stages to their proof of stake implementation. So all of those are risky and a possibility for messing something up. So keep that in mind if you invest in Ethereum or Ethereum-based coins, products, derivatives, whatever. Lots of other coins are based on and in Ethereum. All the NFTs are based in Ethereum. So that's something to keep an eye on. All right. I'm not going to say we have big bottom in Bitcoin. I can support prices dropping on out to about 13,000 on Bitcoin. It's not on this chart, and down here around 3,800 was the last low back here forever ago where we consolidated. So that still remains a possibility to drop out to that kind of level. We do have nice support here, though, that we've held since June, right in this general area. Oh, been there once, twice, 3 times my lady here in the last, this one just twice in the same month here. All righty. Time for your requests. What do you want me to talk about? Yeah, Devin, I'm glad you're liking the wheat trade. If you haven't been on YouTube, I have a trade on wheat, WEAT, right here. This thing is set to break out, and I am looking for it to rally up to this $15 area potentially. So if you want to go check that out. So, all right. CHRW. Well, that looks a little bit bearish to me. Breaking below the roadmap line, pushing down into the lows today. I don't know. It's had a lot of sideways, failed to maintain the breakout. Let's draw a couple lines. Yeah, it looks like you could go retest this trend line right there very easily, back down around 100. And hopefully find support there. If it does not find support there, then the extension down might look something like this. And you could retest the low here at 85, 86, and then potentially extend on down to 78. So be careful on that one, especially if the market decides to go a little crazy here. All right. DVN, Delta Victor, November. Yeah, that's a 3-wave retrace right there, holding a higher low. This one is set for a breakout here. If that echoes, yep. So this, let's zoom up and talk about this for a moment here. Use my zoom tool. All right, so we have this pullback right here. Everybody see how it's 3 moves, like 1, 2, 3 swing moves, right? Let's grab this tool, Elliott wave correction. This right here, A, B, and the C wave down. So this C wave down from B to C is basically the same size as A, 0 to A. That 100% fib level that I drew in there hits right in those 2 candles. If we can hold in this area right here and find support and start breaking back out, back above B, this thing can get an extension, and it's set to rally up to around 87 or even 98 on the upside. All right. Oh, thanks, DIYer girl. I'm glad you're finding that beneficial. All right. Ford. Yeah, they announced some supply chain issues today, filling the gap back down, which was to be expected, really. They had this crazy gap up on earnings and coming back down, filling the gap. Needs to hold support right here and find some lift off here. I was hoping it would find support at the roadmap line, but obviously this announcement today pulling it back down. So just a speed bump in the road on the longer term chart. I mean, the bigger pattern is still quite bullish. This pullback came down, bounced at the perfect level. There's an opportunity to pick up some shares. Anything above about $10 is a really good entry point at this point. If it starts breaking down below 10, then it's kind of messing up the pattern. But anywhere in this zone right here, it can maintain. If it starts breaking down, then it has opportunity to go lower, and that's not so bullish for the long term. But right now, it has this massively large long-term pattern where if it holds right in this area, it can rally up to much higher prices, 30s, even 50s. And then longer term, I'm looking for triple digits, probably 5 years out from now. So that potential is sitting in that chart right there. All right. Yeah, now it has another gap to fill to the upside that is entirely 100% true because it gapped down. So now it's got that gap to fill right on the upside right there. So that's it's the upside and the downside of Ford right now. So, all right. Let's see. I missed one, I think. UNG. Yeah. Looks like it's coming down to the roadmap line right there. That orange 144 EMA. Looks like we're going to come right down there, find some support and bounce is my intention. Chevron came out at the end of the week last week announcing that we were going to see higher gas prices into the winter, coming into the winter. So natural gas did kind of already test the roadmap line right there, find a little support, moving back up today, and we just got to break out. I mean, this was basically a 3-wave down. Didn't quite extend the full like echo that it possibly could have. It could stretch just a little bit lower, which would take UNG probably down, fully test into the roadmap line there. And that's where we want it to hold support though. Natural gas typically finds its peak every year in the October to November timeframe. So we've got 2 months hanging out here that this thing can turn extremely bullish, extremely fast. So keep an eye out, watch out for that one. All right. WHR. Well, I mean, they came out and announced that sales are down and it's not looking good, right? That chart pretty much says that they are looking too hot. I mean, them and home builders like DR Horton, if I get that right, DHR, DRH. Yeah, I can't remember it at the moment. Anyway, home builders like DR Horton, Lennar. See if I can remember. Elliott, there we go. Yeah, that one hit right where I thought it might. Watch for it to extend down lower. So, and DR Horton. There we go. DHI. This one could extend down too. So these are home builders. The house building situation is not looking so hot right now. Although lumber, LBS, this is the thing working for lumber right here. I'm expecting it to pull on down probably this 350 area for lumber. Right now we're at 500. We had hit, we just came off of all-time highs, like ridiculous all-time highs, all the way back up here at 1800. This thing needed a pullback, and it can even extend lower than it has been for the last 20 years. So good if you're going to build something in the future, bad if you're expecting a booming economy here. So this is not being a victim of inflation right now. So that's good right there. All right. DIA, the diamonds, not looking so hot. Put some fib lines on here. Yeah, pushing down on the 786. If I was betting on diamonds and diamonds alone, I would expect it to continue downward, 285 at least, if not lower. So, all right. CCJ. Yeah, thank you, DIYer girl. All right. I've got a million tickers in my head and I can't necessarily remember them all. So this one, you notice I have a whole bunch of lines on this chart right here. And we've been consulting sideways. So this is the range right now for CCJ. Until it can break out of this funk, either the upside or the downside, it's going to continue to just kind of do this. Drift up, drift back down, drift back up, drift back down. And it could finish drifting up before it, finish this before it does that. So Google is another chart that reminds me, and they kind of broke out the bottom here. So extension down for Google. They really need to hold on to that low, which they tried to push below it today. Didn't, then got kind of saved right the bell there. So Google needs to hold on to that. Otherwise, not looking so good. We could get an extension lower. How low can it go? Well, down to 96 or even 88. Apple, yeah. Well, we talked about Apple a few minutes ago, right there. So Apple on the daily, though. What does that look like? Oh, grab my fib, pull it down to the lowest low here. So the resistance right now, you clear this off of there. Got resistance hanging out above us right there. We've got the daily roadmap line, which we were pushing up through today. Positive sign, first positive sign. Next, we have resistance up here at 165. I am long calls, 180 calls, 180 calls out to December 16th, expiration. I think that's right. And then the extension out here, 183. So my 180 call, I paid about $1.95 for them. I sold a 160 call against it last week, which financed most of it. I have no calls sold against it right now. Looking for Apple to turn bullish. Like I talked about on that 3-day chart, that was the perfect 3-day roadmap bounce, the classic move, break up through the roadmap line, come down, retrace, find support. Now we start the next run. So that is the play for Apple. Now, as I talked about, this was just the move off if we repeat this move, market likes to echo, that can take us right up here to 195, which you can see the confluence of the levels right in that zone. So right in there is kind of where I'm expecting that Apple can take off to. Now, this is, notwithstanding the correction that could take place, and this could be postponed off for however long. I'm just kind of playing both sides here, though. I don't let the overarching bearishness possibility necessarily stop me from looking for great opportunities to take advantage of, just in case that bearishness doesn't play out. And the world is bearish. When the world goes quite bearish, then we tend to go quite bullish. And let me see if I can pull up a chart real quick and flip it over to, I had it sent to a friend of mine here. Let's see. See if I can get this chart. Download. There we go. Send it to me on Slack so I can put it on this computer. Go. All right. Let me see if I can pull this up real quick and talk about it. Really quick. Oh, it's going to take a second. Upload, go. There we go. Now it popped up. No, I need to. Come on. Show me. Pop it out. There we go. New window. Here we go. Right here, this chart. So this is S&P 500 stocks above their 50-day average. Right here at 30 is where we tend to bottom out. You can go back. I tend to zoom this out to 10 years and 20 years and show it in Discord. That 30 line is kind of the point where we find reversals. Now, I put out a warning back in August on my YouTube channel when we hit above 90 right up here. And everybody sees, we got a 300-400 point drawdown, maybe 500 point even off of the S&P 500 before we're down here. Now, this right here is extreme oversold kind of territory. So I can very easily, very quickly see us recover out of that. Hey, the boss is here. Happy birthday, babe. It's her birthday and she made it. I wasn't even expecting her to show up. Anyway, I haven't covered Tesla, so I can pull that up in just a minute. All right, CCJ. Yeah, I already talked about that one. CF. So CF right there has resistance, needs to break through and break out. Came up short of reaching the 1272 target and then came up short of hitting the roadmap line. So it may, I'm not entirely sure what it's going to do next. It doesn't have a similar pullback to use as a measure. I mean, that one kind of sort of about the same size, but then it rallied up a little bit and failed and came back down. So that it may rally up a little bit and come back down. So just be careful there. Of course, a breakout above this prior high can lead to extensions out to 134 area on CF. All right, you. Haven't looked that one up before. Looks like sideways. It's just, I mean, that for all year, just kind of like sideways, just bouncing that zone. Nothing over the bullish. You know, URA, uranium is kind of on a downtrend here. So watch out for that one. LAC, though, is potentially trying to get slightly bullish. So plan your alternate energy stocks there. All right, Tesla. That, broke up through the roadmap line, held support there. I talked about if it breaks down, we'd see a lower. Nope, it held. So it's looking like it's going to extend out. I have had a long-term, before the split, I was holding a $1,500 target, which now after a 3-to-1 split would be about $500. So right up in that $500 area. But we got to keep going. So, right now we're banging right at where we've double topped right back here in August. We need to break on through, and that can quickly and easily see some extension. The next resistance will be coming up at these prior highs up here. And then, once we get out of that funk, you can see some higher prices. And you've also got this to contend with, which is downtrend of highs. High here, high here, high here. Got to break through right in that zone right there. Right in the zone, auto zone. All right. Yeah, Paul. Here, I'll turn on everyone in the chat so you can tell her happy birthday. Paul was wishing you happy birthday. All righty. Let's see. Anything in YouTube? Nobody requesting anything right now. All right, cool. Anybody got anything else? I mean, we've been going for 30 minutes now, so take a few last minute requests here. I'm gonna wrap it up because I gotta go see Kimberly. We're going to a place called Schultzbrow for OK to Beer Fest. I mean, Oktoberfest. All right, MSFT. Yeah, looking needs to hold support here. Otherwise, we can extend lower on Microsoft. All right, and Mara holding in the zone. Bitcoin's got to turn positive for Mara. We're right at the 618 here. Right in the kind of line in the sand. Right around this $10 area needs to hold. If it doesn't hold, then we can start seeing extensions. The last line of support's around $8. If that doesn't hold, then we're probably going lower low. All righty. And MU. Extending lower, similar to all my other high-end chip makers. If you don't know the fundamental story here, a lot of commodity chips were given up. A lot of commodity chip production, like by TSM, was given up in favor of high-end chips because there was strong high-end chip demand. Now that's coming back to bite them a little bit because that high-end chip demand dried up. Dried up back here when the market turned. And we so that they're sitting on inventory of high-end chips. The low-end chips are still in great demand and in scarcity, and the profitability on the low end chips is low. So they put their focus on the high end chips, and that's they've got the inventory now that they can't move, and the low end chips, all the when you look at a circuit board and there's all those other chips that don't look like microchips, there's all those little semiconductors on there that are voltage regulators and things like that. Well, they don't make as much money on those things, and they kind of pushed aside making them, which causes problems for car manufacturers and all the manufacturing shortage that we hear about. Well, they've had trouble getting those lower end semiconductors so they can make their products, and now that's all coming to roost, as I say. For all these NVDA, all these big manufacturers sitting on that product and they can't move it. And so that's the real kind of story going on semiconductors. EMAT. Get my fingers to work right. That one looks like it's going to go lower low. We can extend lower. Push below the 786. So 75 area on AMAT. OXY. Looks like it's going to retrace to that roadmap line there. Get rid of some of these lines. Yeah, it looks like it's going to keep chugging along till it hits this roadmap line. Alrighty. UUP. That's the dollar, right? Yeah. So EXY is kind of like the one that's charted, and we can see an extension out to 120 on the dollar. So what does that lead us to on UUP? Well, that's a little more difficult since it's not priced in the same kind of numbers here. Let's see what we got. If I can do a little magic here on the chart. It looks like we could see a move up to 30 on UUP. You've got all those little echoes going up through there, and each one of those echoes has an extension too. Yeah, so 1618, 2980 before we might see the next pullback. That next pullback probably will echo one of these prior pullbacks. I'll pull back into the low 28s before the next move out, potentially to 30. So alrighty, AMD holding in here a little better than NVIDIA, but it needs to hold this zone right here. Just hitting the top of my target there. Needs to hold there and break out of this downtrend if it's going to get bullish. Otherwise, we can see extensions and back into the 50s, not unheard of. Target on wheat was 15. All right. Yeah. So I don't use the 50 EMA. I use the 34. I use the 144. I use the 169, and I use the 513 for an indicator to get into trades. So just to answer that. PLTR. I'm going to wrap up with PLTR if I can type it in correctly. Like I said, got the wife's the boss's birthday. PLTR, I think I said it was likely to extend lower here. If it couldn't break out, it did not break out. So extending lower it is. Needs to retest this prior low over here. Probably one more good push down, retest it. If it does break it, we could see a move down into this $5 area. Assuming it holds it, then we can expect it to come up and retest the roadmap line one more time. All right. Well, thanks everybody. It's been great. AMZN. I talk about that every week. So that's it filled that gap. I told you it was going to fill the gap. If it can't hold here, then it's going to return back down to the top of this box. And that box was the pre-COVID consolidation box. So yeah. Okay to Beer Fest. I love that commercial. Yeah, thanks everybody. And keep following me. I'm gonna keep putting out stuff. Yeah, if you're on YouTube, make sure you like and subscribe it. I'm gonna stop the share and check this out over here. I'm gonna link a video. If you're watching the replay, go check it out. I think you'll find it interesting. So thanks everybody. We'll see you again.